First of all, I think whenever we're seeing headlines like we're seeing today, and we'll get into those in a second, but I think it's very important as human beings, but also as investors, to keep in mind that very rarely do worst case scenarios happen. Having said that,
the opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. As always, please remember investing involves risk.
and we are back, or should I say I am back, with another edition of the Daily Dots, and I am joined as always by the Brain Trust himself, Mr. Chase Taylor. It's good to be back in the saddle, man. It's good to be back.
It's good to be back over here with my own bobbleheads.
Yeah, there you go. Yeah, it's got to feel that's like an away game, right?
Yeah,
you're playing in somebody else's house.
I'm gonna have to start moving them over there. Like at least one piece of my own swag to your side.
Have Darren doing that. Darren's back in here shuffling everything back and forth, depending on who's here, who's not. Darren, why are you working so hard? Well, Chase had to dip out for an early lunch.
You know that sushi restaurant where like it goes around on the conveyor belt?
Oh, yeah.
We need that with our stuff and just switch them around.
Have you ever eaten in one of those?
I have not.
I haven't either.
I'm curious, but I haven't done it.
So here's my thought behind it, and no knock on it. I bet you there's killer spots out there. If I'm going to eat something that is raw, I gotta have a higher level of credibility surrounding that meal than like a food train. Do you know what I'm saying?
It does. Yeah. I'm with you. It's a little weird. It's cool, but it's weird at the same time.
Like if it was like dessert, like if it was Reese's peanut butter cups, and like Snickers moving around on a train. I mean, that's fantastic. Right. But raw fish.
Yeah, that's fair. I feel like maybe somebody like picked it up and almost ate it and and they put it back on the belt.
Yeah, there's all those, and I'm sure there's safeguards against stuff like that, but it geeks me out. Anyway, we actually do have things to discuss for real here. Why don't we, there's so many different angles we can go. Obviously, Iran, Middle East. Before we do that, why don't we get a little rundown on the indexes, run us through the rates, gold, et cetera.
Yep. So S&P closed down 1.13. And the market went everywhere from like kind of down 2% last night all the way to almost green today. And then when Iran launched their retaliatory missile strikes, we kind of went back to -1. So closed at -1.13. Q is -1.26. Small caps -1.8. Equal weight -1.2. Mag 7 down about 0.7. All world ex-US down 1.3. And then we had oil close up about 7.5%. Gold up about 1.5%. Silver flat. The other metals down. You kind of had like risk off in pockets and then not in others. It was kind of interesting. Bitcoin didn't react very well, down on the day, back to 105. A big story to me is the dollar only up 0.38. Given a big safe haven type event to have the dollar have a puny bounce, just interesting. And on that same note, on not getting a safe haven bounce, the 10-year was up about 5 basis points, 30-year up 6, and the 2-year was up 4 basis points. Front month vol up about 8%, back over 21, close to about 22. That hit 23 at least overnight, so kind of similar.
I'm glad you brought up the dollar because I was got up later than normal. Didn't get home from my trip last night. I think I pulled into the driveway like 12:45 a.m. Was still up before market open, but was getting my coffee right around like 6:05, 6 a.m., and just checking the headlines real quick while I'm sitting there. I got one of those Nespresso machines. So you got to sit there and wait for it to, pour. And I'm waiting for it to pour. And first thing I thought, headlines. And I thought, well, wonder what the dollar's doing. And I kept hitting refresh because I would have, in my mind, I was like, whenever you've seen a headline like that, honestly, in my career, I can't remember a time where I didn't see the dollar up sharply on news like that.
Right.
That was shocking to me.
Feels like some information value.
Yes. I literally closed my internet and reopened another tab just because I was like, this can't be right.
Says a lot.
And I don't want, again, it's one day. I don't want to make too much of it. Have you ever seen a day where we had headlines like we had today and the dollar just...
I would have thought the dollar would have been up 1%. Like this year's been different, like for sure. Like a lot of, hey, the dollar's up today, right? Based on some other stuff. You look over like, oh, no. It's become a thing this year. You know
the one part about it that, and we could sit here and speculate, and anybody that's talking about it is just speculating. I wonder why. I wonder what the mechanical, I wonder, is it, do you think it's mechanical selling that anytime certain levels of volumes are triggered, people are just like systematically deleveraging out of US positions and diversifying around? I mean, do you think that's, I would think that probably plays a part.
I just think at the end of the day, people are now trusting both the euro and gold just more. Like they view that as safer right now, especially gold, obviously. But even like if you look at the way currencies reacted to some of this stuff this year, like the euro usually does pretty well around these times. Now, yesterday, we had light inflation, we had more tariff threats that pushed the euro up. So like it could just be residual from that. People didn't buy enough yesterday and needed to buy more today or something, like who knows? But that I think just people just trust other things a little more than the dollar right now.
Some interesting things. First of all, I think whenever we're seeing headlines like we're seeing today, and we'll get into those in a second, but I think it's very important as human beings, but also as investors, to keep in mind that very rarely do worst case scenarios happen. Praise God for that. Having said that, what's interesting to me is something that you and I talked about, and we've talked about extensively in our investment meetings, that when we get into geopolitical environments like this, and I'm sure that there are others, there's probably listeners right now going, oh, what about this? You're forgetting this. I'm sure there's others. But to me, like the three kings, when I'm thinking about geopolitical uncertainty around the world, to me, the three kings are gold, oil, and vol. And when all three of those things are reacting strongly to an event, that tells me that it's an environment that, not that there's panic, but it tells me that the market believes that there is legitimate geopolitical risk.
You have to price in probabilities of that worst case.
Yeah. And I do think, and I'm interested, well, you know what? I'm fine with being proven wrong, because I think if you're an investor for long enough, if you really think about it, investing is a lot like baseball. You know what I mean? It's like the study of what you did wrong.
Right.
You know what I mean? Like I know, like you and I spend way more time dissecting where we missed things or what we got wrong than what you get right.
Bobby Knight always talked about it's really a game of minimizing mistakes, not a playing well.
Yeah. It's really, really looking at what you did wrong. Having said that, though, I am reminded of and the reason I preface that with this is because I'm not saying I told you so at all, but our thought, or at least my thought when we were talking about this subject, talking about gold and vol and oil and all this stuff that we were talking about last week, my thought was, if these geopolitical issues are as serious and continue to ramp up, I would expect to see certainly gold and vol, trade in lockstep in this particular environment. You know what I mean? Doesn't surprise me at all to see oil moving with that. But I would say that's kind of like your geopolitical blinking red light, right? When you see those things rallying significantly, especially in a red market, it tells you there's some legitimate concern. There's some legitimate fear.
Yeah.
Now, that being said, gold was up 1%, right?
Yeah, when none of these moves were huge. I mean, oil 7% is not nothing, but
no, and it
was up 13% at one point last night. So
yeah, VIX was up 7%.
Right,
it's not a huge. That's not a big move for the VIX. Nothing crazy.
Right,
but it does harken back to why we were saying last week. In an environment like this, if you can buy vol 18, 17, somewhere in there below. Obviously you can't sit on it forever because it'll eat you alive, but you get in these environments where you see all these potential risks on board. It's good to own some stuff in your portfolio that will and when we say buy vol, I'm not sitting there going out and buy, futures on the front month of the VIX or something like that. But just, things that go up in times of trouble, right? And what I will say, for the first time in my investing life, I don't think, now I'm not saying that these will not react this way eventually, but for the first time in my investing life, when I listed off gold, oil, and vol as the three kings of geopolitical volatility, I didn't include treasuries and the dollar. And in my entire career, I would have listed those two.
Yeah.
Right. Now, they very well could end up being that, but it's a weird place to sit there and look as a portfolio manager going, I can't go back to the same playbook. Remember going into COVID, I had a slug of treasuries. I think 25% of the value portfolio was in TLT, going into it. I loved making money on treasuries.
Yeah.
You know what I mean? You just can't do that today. And like I said, it could be the right play.
Yeah. It can definitely be a good tactical play. And it's funny, we were talking about this the other day, like
that trader on Twitter
had a nice move. And then it's funny, it's last night, you had oil up a bunch and you had treasuries rally. And I'm like, no, wait a second. If oil goes up, inflation's going up, and this is probably not good for the long end. And then you saw it's almost like someone's slipped that memo to the bond market this morning, like, hey, this is inflationary. And the bond market's, oh, yeah, that's right. And then whoop, we went back the other way.
Yep.
So you bounce right off perfect resistance, like on the 10-year yield too. So,
well, and this is an interesting question. And I thought this would be a good discussion to have on the show. I do not know the guy. I've never interacted with him. I've seen enough of his tweets to think that he's a smart, knowledgeable guy. Don't think he's a charlatan. Know very little of the guy, but respect what I know. JC Parrott's guy on Twitter.
Really good technical analyst.
Yeah, good technical analyst. Don't know. Check out his site. I'm not vouching for him. Don't know him. Don't know anything about him. I've just seen his work, and he puts out good work. And he floated a trade idea that's something that I've toyed with a lot. You and I have discussed. The contrarian in me has been drawn to it many times. But he was kind of like pounding the table saying now he thinks it's time to go long duration here. That is a fascinating debate to me, because I was reading through his reasons and I thought he laid out a really good case. I thought he articulated it very well. I'm going to put bonds, and I don't want to influence your.
We talked about this. Well, it was like 2 or 3 days ago.
Yeah.
So I think we kind of largely hammered it out.
Yeah, we largely hammered it out. I put it in, and you speak freely. Maybe your take is stronger, weaker than mine, whatever. But I just put it in the too hard category, man.
Yeah, I'm happy to do it with 2 year and
with 2 years. Yeah, I look at the risk reward. Like, do I see a scenario in the next 12 months, realistically, where the 30-year rate falls sub 4? It's really hard for me to envision that. And the only thing that I think could get you there would be some horrific geopolitical event, maybe.
It to me, like the early part, the first phase of a recession would do it. Like,
you think so?
Like, if you got, let's say that, you get 2 jobs reports in a row that are negative, and you have unemployment, say, go from 4.2 to 5 in 3 months.
Yeah, but how long? Like, I know, but how long? And I was thinking about this
first phase,
right? And I was thinking about this on the flight home last night. How long does it take the market to look through that? Because the market knows. Because the market knows now, right? Oh, well, so you want me to buy duration right now when I know your deficit's about to blow out to 10%,
right?
And you're also going to give stimmies, because everybody knows, if you're a compassionate politician now, anytime there's a stimmy and anytime unemployment pops above 5.5, you got to send checks out.
Yep.
right? So my whole point is, for the first time ever, I'm sitting there going, could rates fall on the long end like they normally do? Yeah, they could.
It's probably just a great place to reload bond shorts compared to a great. I think it would make sense to own them for like 2 or 3 weeks and like catch that 60 bips or whatever, and while the labor market started showing the cracks, but then the Fed gets in, starts slashing rates, and all the fiscal comes, and I don't know. It's like you said, too hard pile is the best way to think of it.
Yeah, and
the risk reward's not there.
Yeah, and it just I really can't, an overused analogy, but it just feels so perfect in this scenario. It just feels like you're picking up nickels in front of a steamroller. You might get away with it, but I don't see a big op. Like the driver for me, and I'll do a comp. The driver for me, why I was so loaded up on treasuries going into COVID, is my belief at the time is that this was a much bigger problem. And not only was the market not pricing it in, but the market was completely ignoring it. And I thought when the market realized the issue, rates would drop like a rock and do it really fast. Right. Now, very seldom does an investment thesis play out that perfect. Right. So it sounds like a genius take. I could give you 20 other genius takes that sounded even smarter than that didn't play out.
Yep. Okay,
but that one did play out. I just don't like it. And you and I were talking yesterday on the phone. When I think about a scenario that makes me want to own treasuries, I feel like I'd rather own vol and gold in this particular environment.
Yeah, exactly. I mean,
it sounds weird to say that.
If you want a strategic allocation that you can stick with that has similar characteristics, like gold's that thing now. Like treasuries make a lot of sense whenever you're in persistently disinflationary environment, when inflation's secularly falling, when all those drivers are at your back, and all that stuff's a headwind now. Like,
yeah,
every kind of big picture trend you can think of that would be good or bad for the long end over the next 10 years, you look at it like, no, thank you. Like, it's all bad to me, whether it's demographics, whether it's the deficit, like you kind of pick one of the big, I mean, the amount of money that's out there to finance it, not just domestically, but globally. Like, we had this giant savings glut in the 90s and early 2000s, gone. Like, there's so many reasons to be afraid of it. So I am.
Yeah,
I'd rather take those shots at shorting the long end whenever they present themselves.
It's just odd to say that, but if you think about it, it makes perfect sense, right? Like, if you think about every other issue that we've ever encountered on a geopolitical basis or a financial basis, or wars and rumors of wars and all that kind of stuff, the safest haven, the most sure bet out there was that rates would fall and treasuries would rally, right? You couldn't bet on that happening in any other country, but you knew that would. For the first time in the US in my career, I'm sitting around going, look, I'm not going to bet against that happening.
Right.
But I'm not betting for it either.
And to add to this, like, we talked about how much money is in the US now. It used to be, I think, something would pop off like this, and you may sell some of your domestic stuff and go put it in America, right? Well, now you already have all your money in America. So it's not like you need to sell your home currency to get your money into the US. It's already there.
Right. Well, and this was the problem. There's not an academic term for it. I bet a guy like Patrick O'Shaughnessy probably has an academic term for it. No, and that's not a knock on him. Very, very smart guy. But there's like a term for, like when you're a kid and you're filling up your Slurpee, right? And you fill it all the way to the top. Then you put the domed cover on there, and then you fill it up to the top of that, because you're getting you're smacking it down. You're getting your money's worth, right? That's kind of the way that I view it. Like, at a certain point, right? And that's kind of what stood out to me at 70% of market cap around the world. Could it go to 75? Sure. But you're looking at it and you're like, that Slurpee is so bloody full.
We're already over the dome cap.
Yeah. And that's why I was just like, it's
already
so
licking the side of the cup.
Well, yeah, right. Like inflows aren't going to get bigger. You know what I mean? And so you're just like, it's just natural that the flows have to start moving other places. Not all of it. I'm not saying the kid's dropping the Slurpee on the floor, right? I'm just saying you're tapped out, man. I mean, who could have known it was the top? Now watch it go to 80% of global market cap.
Right.
But I'm just saying, like, what are you expecting? Like I mean, that kid even filled up the straw. You know what I mean?
It's funny because like Kevin Mears talks about that event he went to in New York like early this year or late last year, where he was like, I don't know, maybe some global equities will do better than the US. And like everyone just looked at him like, he had two heads. Like, have you lost your mind? Like what do you mean America will underperform? And perfect example, like you overlay that against this kind of like wild historic high of allocation to one country.
Yeah.
Like naturally everyone's like, oh yeah, well of course that has to, last forever.
Yeah. I don't
like smart people, pros. This isn't like, some.
Well, and it's again, it reminds me, and it reminds me of I keep bringing back up COVID because it reminds me of COVID because I think that you and I have this in common. I am not one of these guys that sits at my desk and thinks everybody on the opposite side of all of my trades are a bunch of idiots and I'm the smartest guy in the room. I just don't think that. I think I'm good at my job. I think that there are people that do this same job that are a lot much smarter than I am. And I kind of feel like my best use in terms of investing is sucking up as much of the information I can from guys that I think are smarter than me, right? And trying to learn, trying to focus, that being said, I sometimes I just don't think guys think things through before they talk. Like like I said, I alluded to COVID. Remember when you and I were having those conversations sort of in disbelief as China was shutting down and the S&P's just ripping to the upside, and we're just sitting there going, what in the world are these people paying attention to? And I knew it was bad when a buddy of mine from Microsoft called and was like, hey, dude, why does our stock keep going up? And I go, what are you talking about? And he goes, dude, we're shut down, man. We can't get anything out of China. We're all scratching our head going, why is everybody buying the stock? And I kind of feel like that about the outperformance of international, because you're like, guys, the minute the trade war stuff started, now Kevin was saying that last year. That's great timing, right? A great call by him. So I give him more credit than the call. But the minute the trade war stuff started, you're like, guys, they're going to have to move money around.
Right.
Like that's a guarantee. And when every cent of everybody's money has been going into the US and just 5% of it stops and goes somewhere else, you're going to notice it in US markets. You're probably going to notice it a lot more and forward more. And that's exactly what's happened, right? That little bit has spilled out of that giant cup. And, it's a lot compared to what was, in the other cups around it that have been sucked dry for the last 20 years, to use Brent's milkshake analogy, right? I'm going to launch my own theory called the Slurpee theory. try to steal his thunder. Well, no, it's the Slurp. Do you remember Trading Places? Remember that?
But
no.
But yes.
Well, Coming to America. Did you ever see Coming to America with Eddie Murphy? Yeah. McDowell's. Yeah. So
I had that on VHS.
That'll be like my version of the milkshake. No, it's not the milkshake theory. It's a Slurpee theory. But anyway, yeah, that was like, it's the way markets move, right? Even if it's just mechanistically, everything doesn't just go all one way all the time. You reach these points where you're like, okay, well, some has to flow back the other way. It always amazes me how I don't know. I guess most market prognosticators are just price reporters, right? They just chase the price. Like you and I were laughing about how the analysts adjust their earnings estimates or their price estimates always after the fact, after earnings, or right. Yeah.
It's just like, in April, whenever we hit bottom, that was about the time everyone came out with their super bearish revised forecast for everything. Right.
And now everybody's pushing it back up. Right?
Which is why I keep saying, like, I actually think the earnings forecast for the year are actually too low now because people haven't really repriced them back up, even though, we've clearly bottomed out, in every other way. So
where do you think, are there any sectors in particular you think earnings estimates are too low?
I haven't looked at them hard enough on the sector level, but we're currently full year 2025, 7.15% is the consensus for the year. And I think there's a good chance we can pull off like 9.
Well, when you look at, so Mag 7 earnings make up 40% of the S&Ps.
And they've been doing great. So
yeah, because basically it's a Mag 7 story.
Yeah. But they got stuff like, today makes a change where, energy earnings were being a drag.
Yeah.
And now, well, if we stay up here, they're not. So
yeah, Tesla earnings are going to be pretty tough to overcome. That's yeah. That they're in a tough spot, man. Do you hear what they've got to do to do self-driving? They've got to have like robo drivers on command now, and they have to have other cars following them. And again, never betting against Elon and wish him all the luck in the world, but boy, they're up against it. I was down there in Mexico, BYDs all over the place, and some good looking cars.
Great vehicles.
Man,
just do.
And one of the guys was pointing out to me, one of the drivers was pointing out, see that new car they're all over the place. Those are great. He was talking about BYD. And I was kind of like sitting there going, yeah, as a matter of fact, I do know that car. Know it well. Let's see. What else?
We're 25 minutes in. We haven't really talked Israel, Iran. So.
Oh, yeah, boy, saving the best for last. Okay. So for those of you, I'm sure people have read it at work, caught up on the news. I
say that not that we have anything super special to offer, honestly, but
no, but we'll at least give it to you unvarnished and unbiased. Israel kind of took the gloves off. I think it's fair to say.
Yeah, and I think they're about to take a couple more gloves off. So
yeah, they hit. What did they hit?
So the early attacks were against nuclear facilities, missile facilities, some other military targets, and then the decapitation of leadership, which spanned both military and the scientists from the nuclear program. So at least 4 or 5 generals, a host of other senior military leaders, and scientists. So to me, that was the more impactful part of the early round. And then as we're recording this here, 1:30 on the West Coast, Iran has hit back, and at least as of now, seven impacts in Tel Aviv, at least 40 casualties, and that, not just deaths, but like people going to the hospital and stuff. Because they hit some civilian areas, it sounds like Israel will hit some more normal, like, economic targets, ports, oil and gas kind of things, like stuff like that. So we are not de-escalating yet, that's for sure. And given the intensity of those first strikes, like, we may not de-escalate anytime soon, which is obviously concerning.
Yeah. Yeah.
And to me, the biggest, you can get all inside the tactical details of what's going on, but to me, what's most important is to zoom out and go, okay, does this slow down or speed up their nuclear program? And I think the first thought is slows down because you got some infrastructure damage and obviously some intellectual damage, but that's not a guarantee. And you can't, these facilities are deep underground. They're built inside mountains. A 4,000, 5,000 pound bomb isn't going to get rid of that facility. Right. So there's no guarantees that significant damage is done to their nuclear program. And if that,
you got to believe, though, they had I would think, operationally speaking, they had a very good understanding of what the armaments were, what type of bunkers they were dealing with. Couldn't they use some of those bunker busting bombs?
We haven't sold them those in a very long time
that we know of. Maybe USA.
Yeah, but you can already see the imagery, and you can tell that that hasn't really been a thing. So, and plus, like, some of those are pretty big, and it's you can't just throw that on an F-16, and Israel doesn't have bomber aircraft. They have to tow everything around in fighter jets.
Okay.
So, but you're not wrong. I mean, for all we know, like they have a little more capability than we thought. Plus, they do a lot of this stuff standoff where it's goes far, and if you want to get down, you got to kind of drop from top down. So, with that said, when Iran built these facilities, they knew about those bombs, and they built the facilities kind of to spec for those bombs as well. So it's kind of a combat Darwinism where you're both learning from each other's stuff.
Right. The one good news I would say about this, and we were talking about this earlier, is I think this is one of those days where, at least for me, I've kind of had a pit in my stomach all day long, where you're just sitting around going, good golly, there's just so much trouble going on in the world, right? The one thing, though, I would say to calm people's fears a little bit is I don't think Israel going after Iran in this way is as inflammatory as it might seem on the surface, because one of the very few things that a lot of countries around the world agree on is that they don't want Iran having nuclear weapons.
Yeah, I think that's broadly speaking a consensus in their region, in Europe, and the West in general. Even I think if you ask Russia and China, like, hey, should they get nukes? They'd probably be like, maybe not.
Probably not a good idea.
So like
this is not a move by Israel that will engender the kind of angst that will, whatever they're doing in Gaza.
Totally different. For sure.
It's
now, maybe some of the I after all the leadership that may be viewed pretty negatively, but especially the scientist part. But I think you raise a good point, and I already saw like one of a leader in Israel basically said like, yeah, we can't. It's not like we're going to end their nuclear programs with a few bombs, like, and he even said like what we would hope would happen would basically push them into doing a deal with the U.S. and actually, dismantling their program from the inside. I thought that was a little surprising to see, but that makes perfect sense. Like if you actually want to get rid of the nuclear program, the only way to do it is to have a deal in place where they are willing to do it.
Yeah. Yeah.
So it's a gamble. Like it's a gamble that they you can slow it down and not speed it up here.
Yeah. There's a lot of gambles going on. Let's see. On the earnings front, Oracle announced some pretty good earnings. This seems kind of trite to switch over to like,
I forget Armageddon. How about Oracle?
Yeah. Yeah. What was that? Was that all driven by AI?
Yeah.
Compute.
Yeah. Just the demand for. So it's funny because, they do a lot of database stuff, and I just wrote a piece, whatever it was, a week ago, I don't remember anymore, about, because, a month happened this week. I noticed database companies were like really starting to like look decent on the charts. And this is after they had a crazy run up in 2020, 2021 because COVID, everyone's working at home, going to school at home. The database, needs exploded. So did their earnings. And then people went back to school and work, and it was like, oh, I'll end my Zoom subscription now, right?
Yeah.
And then all those stocks collapsed. And then they did, my favorite basing pattern of going sideways for 2-3 years. And a lot of them are like perking back up. Some are breaking out. Some are thinking about breaking out. So to see Oracle, a company that, drives some revenue in the database world, kind of being like, man, this is getting hot. Like it kind of validates what you're seeing on those charts.
Did you read the internals there?
I didn't go through it hard. I just saw some of the quotes about like basically like we're struggling to keep up with demand.
Demand for what though, particularly? What? Because they do so many different things.
Yeah, it's definitely a good point.
I mean, they got their hands in bloody everything.
I always think because I dealt with them in the Air Force just on the pure database side. But you're right, they do all kinds of stuff.
What was your guys' what was your impression of them when you dealt with them on the Air Force side?
No, it's fine.
Did you feel similar to them like you guys did with Palantir? Did you love them?
No, different though, because one, you're trying to store some stuff, and one is like very like user software. You know what I mean?
Okay.
And I'm not a database administrator, but talking to those people, they liked it. But it's like one of those weird things. If you came up in the Oracle world, you knew how to do all their stuff, and like you're basically an Oracle person.
Got it.
Even though you're a database person.
Listen to this. In April alone, Tesla registrations fell 16% year over year.
So speaking of, Oracle's, their revenues were up 11% year over year, 14% in cloud services, 9% in cloud license and on-prem license revenue. So their earnings were $1.70, which beat expectations. For the full fiscal year, revenues up 8%, cloud services up 12%. Management highlighted robust growth in cloud infrastructure, with Oracle Cloud Infrastructure revenue up 52% in Q4, and expectations for this segment to grow over 70% in the next fiscal year. So I think that's where you're at. Cloud infrastructure.
That's what's driving it.
Which is, I think, and because so many things are getting pushed into the cloud, I mean, you still have just basic migration of, normal businesses getting pushed in the cloud, but then you have so much, data crunching happening in the AI world that you kind of get crowding out almost in the cloud, I think. So it's just, people are just struggling to keep up with that in general.
Yeah. Yeah. It's a wild world. What do we got coming up next week? What are we looking for next week? Obviously we're going to be keeping an eye on the China-US trade talks. It sounds, from the sounds of it, and we're all reading tea leaves at this point, sounds to me like they've hit a bit of a snag in discussions.
I mean, at the end of
it's
the day,
hard to read one way or the other, but
at the end of the day, like all we did was put a bunch of stuff on each other and then we took some of it off. We disagreed on how we went about taking it off. So we re-agreed on how we took it off. Like nothing's happened.
Yeah, nothing's really changed.
There's like people referring to it as a deal. Like that's silly. Like there's no deal.
Yeah.
It's just, we really needed a couple things. They really needed a couple things. So we're like, fine, let's just give each other those things and move on.
Yeah. But nothing is better off than it was a month ago.
Not at all. There's still significant tariffs in place. We obviously badly need the rare earth magnet stuff. And they clearly, that's a problem because we can't do anything about it short term. They know that. And they even said, hey, 6 months, we'll revisit this. Basically like, we're going to want some Christmas presents for rare earths here in 6 months.
Yeah.
And they'll get them, right? But we pulled back on ethane and then we gave them the ethane. Like it's just,
like, I don't care what your politics are and what your thoughts are on environmental thought, anything like that. It is absolutely insane for a government to allow a country to freeze out sectors for environmental reasons that force them to purchase those items from other countries. Right. That's insane on so many levels.
Yeah, it's like when you're a kid and you get tasked with sweeping and you literally sweep some stuff under the rug,
100%,
and pretend like it doesn't exist.
Yes, 100%. Because who cares where you're getting it from? Yeah. Right? It's all going in the atmosphere anyway.
The net total global is all that matters when it comes to that stuff.
Right. And what is far more dangerous to you is that you become wholly reliant on very highly needed things from an adversary.
Yeah. As I heard on the podcast Dimitri did with the guy that wrote the book about free trade or whatever, he said, you can't win a war with leverage buyouts.
Yeah, that's yeah. Yeah. And it's a great point, man. And it really is shocking. And even as a US citizen, I knew we outsourced a lot. I didn't realize the extent to what we did.
Yeah. Like, I don't think letting a bunch of stuff go to zero, like rare earths is like that's crazy.
Well, and then it brings it up on the regulatory side again. Guys, you can't make it impossible for people to mine things that are 100% necessary for you to run your economy.
Right. Unless you guys want to all agree, we don't need cars and we don't need, to win wars or whatever.
It's just economic suicide.
Yeah.
And potentially military. I mean,
it's one thing if your best friend makes it, and it's like, fine. Like, well, if we can buy it from England or Australia or whatever, like that, sure. But if it's, there's some stuff where maybe you should be able to do it yourself.
Like a good example of that is probably not a good idea for the U.S. military to be purchasing drones from the Chinese, from China. Probably not a good idea.
That's fair to say.
I mean, color me crazy. Some might think I'm racist for saying that, but yeah,
If anything, we should have them open the BYD factory because that isn't a giant national security problem.
Yeah.
But while making sure that some of the steel and rare earths and things that go into it, not so much.
Yeah. What do we have for data coming out next week?
So we'll have the Fed next week, retail sales next week. No, it's kind of the big ones. There's not a huge data week. And again next week, I keep kind of last month talking about this, but jobless claims will be important. Those continue to not look great. So I think that's and maybe the most important data next week. We do get starts and permits for housing, and that is it's getting more important every month.
Yeah.
Housing just looks pretty troubled to me.
The other thing is I really hope that I don't have a whole lot of hope, but I do hope that things settle down in places like LA.
It looks like it is. I mean,
good.
It's gotten a lot better in the last few days. But speaking of that, though, we should mention, as much as I don't want to,
as much as I don't want to talk about it.
So we have the Army parade, I should say, this weekend for the 250th anniversary of the Army. There's a bunch of No Kings protests around the country.
Yeah.
And then the folks on the right are talking about counter protests and going out and confronting those protests. And if you just kind of skim some of the online talk in that area, like there looks like there could be some problems. So hopefully there are not, but that is a potential flashpoint this weekend that is worth keeping one eye on.
Yeah, this is, I mean, you don't want to sound too Pollyannish, but yeah.
I mean, we can't, there's been some nasty like shouting matches and name calling and F-bombs and stuff on the floor of Congress in the last week. So the thought that we're all going to keep it together, in the Walmart parking lot and at a protest or whatever, like, I don't know, like, my hopes aren't high.
And I'll tell you what, man, it's one of the things that irritates me, and irritates not strong enough language. It infuriates me when I see people in any position, but especially if they're in a position of influence, advocating for things that result in civil unrest and neighbors fighting each other. And right. At the end of the day, the neighbors need to not do that, right?
Like it has to really start from the neighbors.
Yeah, but
bottom up.
But try to do something decent for somebody this weekend. Reach out and, just try to. I just hate seeing it, man. I hate seeing all this strife and all this battling and it's just it's part of life. It's part of the culture we live in today. But man, it's unfortunate.
No doubt.
So hopefully, God bless America, and hopefully things go well this weekend, and hope everybody stays safe. And as always, you can catch us on YouTube, guys. Just search Know Your Risk Podcast. We've got our interview with Brent Johnson coming up next week. You're not going to want to miss that. And we'll obviously be back for the Daily Dot. So have a wonderful evening and a great weekend. Stay safe. And we'll see you next week. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.